So today we're going to build a trading strategy. The goal here is a high win rate, and we're going to do it by taking one of the most popular indicators out there, the MACD, and just making it better, step by step. We'll start with a problem that, let's be honest, every single trader runs into.
You know this feeling, right? It's a painful truth. You might have an amazing entry signal, but if your trend filter is off or your timing is just a little bit wrong, the whole thing just falls apart. That one weak link can literally be the difference between a great trade and a frustrating loss.
That's the million-dollar question, isn't it? How do we put together a system where every part actually supports the others? Something that's robust, something that's reliable? Well, that is exactly what we are going to do right now.
Look, we're not just going to throw some crazy, complicated chart at you. No, we're going to start with one single powerful indicator. And then we're going to layer on improvements one by one to patch up its weaknesses and really boost its strengths.
So our foundation, the bedrock of this whole thing, is the MACD. If you've ever looked at a trading chart, I'm willing to bet you've seen it. Its main job? To measure the momentum in the market and help us spot where the trends might be heading.
So what is this thing really? The MACD, which stands for Moving Average Convergence Divergence, it works by looking at two different moving averages of a price. By comparing them, it can tell us if the market's momentum is picking up steam or starting to fizzle out.
To really get it, you've got to know its four parts. First, you have the MACD line itself. That's usually the faster blue line. Then there's the orange signal line, which moves a bit slower. The histogram, those bars, just shows you the distance between those two lines. Big bars mean big momentum. And finally, you have the zero line, which is kind of like our center point for the whole thing.
Okay, so here's the basic play. For a buy signal, we're looking for that blue MACD line to cross above the orange signal line. But here's the real key. The strongest signals happen when that cross occurs below the zero line. For a sell signal, it's just the exact opposite. We want to cross below the signal line that happens above the zero line.
And here is the big catch. The MACD is a fantastic tool, but using it all by itself is such a classic mistake. It works like a charm when the market is clearly trending up or down. But what happens when the market gets choppy and just goes sideways? Well, it can spit out a ton of false signals.
All right, so how do we fix that weakness? How do we plug that hole? Our very first upgrade is a super simple but really powerful trend filter. Its only job is to stop us from taking trades that are fighting against the main direction of the market.
And the tool we're going to use for this is the 200-period exponential moving average, or EMA. Honestly, just think of it as a simple dividing line on your chart. If the price is trading above this line, we say the overall trend is up. If it's below the line, the trend is down. It's really that simple.
So let's see how this first filter completely upgrades our strategy. The buy rules now have a brand new first step. Before we even glance at the MACD, we have to confirm the price is above that 200 EMA. This one rule immediately weeds out all those buy signals that would have us swimming against the current. Okay, so we've solved the problem of trading against the trend. That's huge. But there's another trap waiting for us. That sideways, grinding market where momentum just dies, and the MACD gives you signal after signal that ends up going nowhere. We still need one more layer of confirmation. And this brings us to our final layer, price action. By adding a specific price level to our checklist, we can really dial in our timing and avoid jumping into a market that's weak or, just directionless. So what are we looking for? Specifically, a key support level. Think of this like a price floor, a level where, in the past, buyers have shown up and pushed the price right back up. By waiting for the price to pull back to this floor, we're trying to get in right where a bounce is most likely to happen.
All right, we have all our components. We've got the MACD for momentum, the 200 EMA for the trend, and support levels for our timing. Now let's put this whole puzzle together.
And here it is, the final strategy, boiled down to a dead simple 3-question checklist. Number 1, is the trend on our side? 2, is the price at a smart, logical entry point? And 3, is our momentum indicator finally giving us the green light? When you can answer yes to all 3, that's our high probability trade signal.
Here it is, the whole thing laid out on one table. This is your complete blueprint. For a buy, you need the price above the 200 EMA, you need a bounce off a support level, and you need that bullish MACD cross below the zero line. And for a sell, you just flip everything on its head, price below the 200 EMA, a rejection from a resistance level, and a bearish MACD cross above the zero line. Now, a strategy isn't complete without rules for managing the trade, right? So a pretty solid approach is to put your stop loss just underneath that 200 EMA line because it can act as a safety net. And for your profit target, you can aim for a simple 1.5 to 1 risk to reward ratio.
So you see how it all works together? It's like a team where each player covers the other's weakness. The EMA keeps you on the right side of the overall trend, the price level stops you from jumping in at random, choppy spots, and the MACD confirms that momentum is finally shifting in your favor right when you need it most. Each piece covers another one's blind spot.
So, we've laid out the entire plan. The rules are clear, they're logical. But here's the final question, and it's really for you. Having a great strategy is one thing, but having the patience and the discipline to actually wait for all those conditions to line up perfectly before you click the button, well, that's what separates the amateurs from the pros.